welcome to this channel. Today we are going to compare SACCOs and money market funds. We are going to see their similarities and their differences so that at the end of this video you will be in a position to know which of these two investment vehicles is ideal for your objectives or for your financial objectives. You'll be able to know how to allocate your finances in the SACCOs or into the MMFs depending on your investment objectives. First and foremost, please press the subscribe button. Majority of you have not subscribed to this channel. Press the subscribe button. Asante sana. Now, SACCOs is savings and credit cooperative organizations. MMF, an acronym for money market funds. Now, SACCOs are majorly for savings and credit services. MMF it's a market of money, quote unquote. This is where different people, different investors pull their resources together, gives a fund manager to invest these monies on their behalf in different money markets or money instruments, financial instruments. These include treasury bills, investment in treasury bills, investment in bank deposits, investment in commercial papers. SACCOs, on the other hand, it's a savings and credit. Members of the SACCO pull down their savings together and they lend each other. These savings that the members have saved with this specific SACCO is utilized to extend credit facilities to the SACCO members. That brings us into the second difference. As I've told you, SACCO members, membership of a SACCO, for you to become a member of a SACCO. For MMF, you'll become a client of that MMF, its customer. You'll need to pay a minimum deposit to that MMF and then you become their client. For SACCO, you'll become a part owner of that SACCO. Participation in the SACCO, for you to access any credit facility or for you to be able to save in the SACCO, you need to be a shareholder. So SACCO membership is through purchase of shares. And remember, these shares are non-refundable. Now, once you have bought the shares in the SACCO, these non-refundable shares in the SACCO, you will be required to make monthly savings or monthly contributions towards your savings. The purpose of SACCOs is to encourage a savings culture. So all SACCOs in their bylaws, they have a minimum amount that you must save every month. In the same way, they have a minimum amount you must buy the shares. With the same breath, MMFs, on the other hand, also has a minimum deposit requirement. Etika, for instance, requires you to make a minimum contribution of 100 shillings. CIC requires you to make a minimum contribution of 5,000 shillings. So whenever you want to join an MMF, you need to look at the minimum contribution. In the same way, whenever you want to join a SACCO, you need to look at the minimum share contribution and the minimum savings monthly. Another difference between SACCOs and MMF is their regulators. SACCOs are regulated by SASRA. MMFs are regulated by Capital Market Authority, CMA. Both of these instruments or both of these organizations are not covered by KDIC. That's a similarity. Now, another difference that we see in SACCOs and MMF is their return on investments. I have told you to become a member of a SACCO, you need to buy shares and you need to make monthly contributions. Now, SACCOs will pay you two returns on investments. The first one being dividends on your shares and the second one being interest paid on your savings. MMF will also pay you interest on your savings. They invest the monies on your behalf and then at the end of the month, they pay you. Now that's another difference that we see. MMFs pays you interest at the end of each month. So what does that mean? You can compound your investment or your return on investment in MMF. SACCOs, on the other hand, pays you dividends once a year at the end of its financial period, depending on its performance. It also pays you interest once a year at the end of the financial period, depending on its performance. However, they could sometimes decide to pay interim dividends, or they can allow you to access a dividend advance. All right. Now, another difference that we see in these two instruments is the taxes. Dividends on SACCOs is taxed at 5%. Savings on MMF is taxed at 15%. They are both final taxes. Another difference that we see in SACCOs and MMF is liquidity. The liquidity. MMF, your contribution in MMF is easily accessible. You just need to give a notice period. A ticker, for instance, is instant. If the the payment is being made to your M-Pesa, if it's being sent to your bank account, it could be within 24 hours. Now, an MMF like CIC requires 3 working days or 72 hours. Different MMFs have different notice period, but it's normally within about a week. SACCOs, if you need to access your monies in the SACCO, you cannot access that money unless you are exiting the SACCO. They are meant for long-term investments or long-term savings. MMF are for short-term savings. Like we have seen, it's either instant or a notice period of not more than 1 week, depending on your fund manager. SACCOs, however, if you need to access your monies, you'll need to be exiting. For as long as you remain a member of that SACCO, you are not required or expected to request them to pay you your money. So how do you access your monies in the SACCO? You need to give a 60 days notice period, and then your payment will be processed, and then it's remitted to you, and you stop being a member of that SACCO. Now, that means that even if you had savings of, say, 5 million in your SACCO and you need access to just 500,000 shillings, you cannot access it unless you are taking a loan from the SACCO, which you will pay with interest. MMF, on the other hand, if you have savings, accumulated savings of 5 million, and you need 500,000 shillings for some emergency or whatever, you can access that 500,000 shillings, and then the MMF will continue investing the 4.5 remaining residual balance on your behalf and continue paying you interest on your residual balance of 4.5. So liquidity is a very major difference in these two investment vehicles. That now advises you on the right investment vehicle to take up whenever you are saving up your sinking funds, or whenever you're saving up for your emergency funds, or just your short-term savings. MMF will be ideal. SACCOs then will be ideal for long-term savings. Long-term savings. And they are best when you have intentions of taking up loans. MMF don't have that loan facility. They don't have the loan advantage. You will not borrow against your MMF savings. You need your money, take your money, we'll give it to you. SACCOs, you need your money, you're not taking your money unless you're leaving us. We can give you a loan though. So that's a major difference between the two. All right. Another difference that we see is how these two financial instruments earn their revenues. MMFs, like I have told you, invest in short-term, highly profitable, highly liquid investment securities. That is like treasury bills, bank deposits, and commercial papers. SACCOs, on the other hand, lends its members loans, and the members pay back with interest. So SACCOs earns interest from its members, from your savings, which has been lent out to other members. SACCOs, at the same time, also invest in these financial instruments that MMFs invest in. SACCOs can also invest in property. Now, a similarity that we see in these two investment vehicles is the risk of mismanagement. by the managers of this MMF or of the SACCO. Another risk that we see in these two different financial investment vehicles is the lack of fixed income. Why? Because the interest in MMF fluctuates month on month depending on the performance of that MMF. Dividends and interest paid out in SACCOs also fluctuates year on year depending on the performance of that SACCO. Now that you have seen the differences in between MMF and SACCOs, do you have any savings in an MMF? Are you a member of any SACCO? What was the return on investments? What is the return on investment on your MMF and on your SACCO? What are you using these different investment vehicles for? Are you using your MMF for school fees or for long term? And what are you using your SACCOs? Do you have a cap of the amount you'll be investing in either of these two investment vehicles? Leave me a comment in the comment section. Kindly don't forget to press the subscribe button, like the video, and share it out. See you on the next video.